Good morning, students. In the previous videos, we had discussed partnership deed, content of partnership deed. Today, we will continue the topics and we will discuss provisions or rules applicable in the absence of partnership deed. If the partners have not agreed to the terms and conditions and they have started the business, there is no written agreement, there is dispute. So how the dispute is going to be settled? In such a case, the provisions of the Partnership Act 1932 will come into effect, and some of the points at the time of dispute is discussed below. First, profit sharing ratio. In case of dispute, if the partnership deed is not there and there is a conflict, how to distribute the profits? In that case, the profits will be shared equally among all the partners, irrespective of the time contributed or the capital invested. The profits will be divided equally among all the partners. Keep this thing in mind. Profit sharing ratio in the absence of partnership deed will be equal. The profits or the losses will be shared equally. Second point, interest on capital. In the absence of partnership deed, no interest on capital is paid. No interest on capital is paid in the absence of partnership deed. Interest on drawing is not charged. No interest on drawing is charged. In the absence of partnership deed, interest on drawing is not charged from the partners. Then the next point, salary or commission payable to partners. If there is no agreement or the partners have not entered into any agreement, that means written agreement is not there. So or the question is silent regarding salary payable or commission payable to partners, then salary and commission is not paid to the partners in the absence of partnership deed. Interest on partners loan. If one of the partners or more partners have advanced loan to the firm and there is no clear agreement on the payment of interest on partners loan, in that case the partners will receive interest at the rate of 6% per annum, and interest on loan is a charge, so the interest will be paid even if the firm suffers loss. Keep this thing in mind. Again, we are repeating, profit sharing ratio will be equal. Interest on capital, interest on drawing, salary or commission will not be paid. And if a partner have advanced loan to the firm, he will be receiving interest at the rate of 6% per annum, even if there is loss. Some other provisions of the Partnership Act. First, registration of firm is not compulsory, is optional. But it is always advisable to register the firm, because there are certain drawbacks or disadvantages if the firm is not registered. So it is always advisable to register the firm. But registration of firm is optional, it is not compulsory. A minor can be admitted as partner with the consent of all the existing partners. Earlier we had discussed that a person who is a major, who has attained the age of 18, can only enter into contract. So, and partnership being a agreement, a minor cannot be admitted. But for the benefit of the firm, and if all the partners agree, a minor can be admitted as a partner. Minor can with all the partners agreeing, and for the benefit of the firm, a minor can be admitted as partner. Now see, certain sections are there of all these points, but I have not written. If you want to know that, in our book it is written. I have not mentioned because in the board generally they have not asked. Now the liability of partner is unlimited. Okay, each partner is unlimited. We have discussed, no, the firm do not have separate legal entity, and because of this the partners have unlimited liability. Following persons cannot be admitted as partner. Okay, person of unsound mind. A person of unsound mind cannot enter into any kind of contract, so he cannot be admitted as a partner. Insolvent persons, okay, cannot become a partner. Any individual disqualified by law can also not become a partner. Minor in normal course, here we have discussed, if all the partners have agreed for the benefit of the firm, we can admit a minor. Okay, but otherwise in normal course a minor cannot be admitted as partner unless otherwise agreed by the partners in the partnership deed. A firm is dissolved on the death of partner. If any one partner dies, then the firm stands dissolved. That means the business will come to an end, all the assets will be sold and the liabilities will be settled. Now charge against profit and appropriation of profit, it's a very important point. Okay, charge against profit refers to all the expenses which the firm has to pay, and it has to be paid even if there is loss. Okay, example is salary to workers, electricity bill, rent of the premises used by the business, commission, or any other expenses like transportation charges. Okay, these are charges against profit. That means this will reduce the profit, and it has to be paid even if the firm suffers loss. Okay, charge against profit means that it is an expense and is to be paid whether the firm earns profit or not. Next term is appropriation. Now appropriation means distribution. Okay, so appropriation of profit means distribution of profits among the partners. Now after the settlement of charge against profit, whatever profit is left will be distributed among the partners in the firm. So it is known as appropriation of profit, and profits will be distributed when the firm earns profit. Difference between charge against profit and appropriation of profit. Okay, these are the two tables: charge against profit and appropriation of profit. We will differentiate it on the basis of nature. Now charge against profit is expense. Okay, and appropriation of profit is the distribution of net profit among partners. After the expenses, whatever profit is left, it will be distributed among the partners. It is known as appropriation of profit. Where will you record it? The charge against profit will be debited to the profit and loss account. After the profit and loss account, an extension is prepared of P&L account, which is known as P&L appropriation account. So the appropriation of profit, that is salary to partner, commission to partner, will be recorded or debited to the profit and loss appropriation account. Priority, which account will be made first? Okay, so charges will be recorded first. Okay, charges against profit will be allowed before the appropriation of profit, and it is debited to profit and loss account, and after that net profit is calculated. Okay, after recording all the charge against profit, you will get net profit, and that net profit will be transferred to P&L appropriation account, where appropriation of profits will be debited, like salary to partner will be debited. So after preparation of profit and loss account, P&L appropriation account is prepared, or we can say first charge against profit is recorded or allowed before appropriation of profit, and after allowing charge against profit, appropriation is done. Examples: interest on partners loan, rent to a partners. Now see, these two items are paid to partners, still it will be considered as charge against profit. It will be paid even if the firm is not earning profit. These will be debited to profit and loss account. Interest on partners loan, rent paid to a partner is it is paid to the partners as a third party. Okay, outsider, not as a partner. Okay, the salary, commission paid to partners, interest on capital is considered as appropriation of profit, and it will be debited to profit and loss appropriation account. See, all of you, please keep this thing in mind, है ना? Don't show interest on partner's loan, rent paid to a partner in P&L appropriation. It will be shown in profit and loss account. Okay, whereas salary, commission to partners, interest on capital will be shown in P&L appropriation account. But sometimes question is asked that interest on capital is considered as a charge against profit. Okay, in that case interest on capital you will show in profit and loss account, and interest on capital will be allowed even if the firm is not earning profit. If charge against profit is used, okay, so like interest on capital is a charge against profit, then interest on capital will be shown in profit and loss account. Okay, and it will be considered as charge against profit and allowed even if the firm is not earning profit.